Welcome to the Deep Dive. Today, we're zeroing in on Bombardier's 2024 financial report.
That's right.
You flagged this one for us, and it looks like you want to, well, cut through the jargon, understand their financial health,
Yeah, the bottom line.
their strategy, and, where they sit in the whole business aviation world.
Exactly. And our job is to pull out those key insights for you. Make it clear without getting bogged down in dense financial terms.
Okay, so what are we working with?
We've got the official management's discussion and analysis from Bombardier, covers 2024, and compares it back to 2023. Gives us that year-on-year view.
Good context.
And just so everyone knows, the figures are all in U.S. dollars, unless we say otherwise. This is straight from the horse's mouth, approved by their board, so it's their official take.
Right, official view on performance and what's coming next.
We've also got some visuals, some images of their jets, just to help picture things.
Okay, so for our listener, the mission here is a clear understanding of Bombardier in 2024. We'll hit the key achievements, strategy, especially services and defense sustainability stuff, and the risks and opportunities.
Basically, what's shaping their path forward.
All right, let's dive in. What jumps out first from the 2024 highlights?
Well, the headline's got to be revenue growth. They pulled in $8.7 billion.
Okay.
And what's important here is that this actually beat their own forecasts.
Oh, interesting. How?
Two main things driving it. First, their services business had a record year, broke $2 billion. That's huge for them.
$2 billion in services alone.
Yep. And second, they delivered 146 aircraft. Now, here's a little wrinkle. While revenue beat guidance, the 146 planes were actually below their target range of 150 to 155.
So fewer planes, but more money. How does that work?
Seems like it was down to the mix of aircraft delivered, maybe more expensive models, and that really strong services performance we just mentioned. Those supply chain issues everyone's talking about were the main reason for the lower delivery count.
Ah, the supply chain strikes again. But they still outperformed on the top line. Okay, what about profitability? Did that follow suit?
It did, yeah. The profitability picture looks pretty good, too. Their adjusted EBITDA.
That's earnings before interest, taxes, depreciation, and amortization, right? Adjusted for unusual items.
Exactly. That went up 11% compared to the year before, hit $1.36 billion. And the margin, the adjusted EBITDA margin, climbed to 15.7%.
That sounds pretty healthy.
It is. And their reported EBIT earnings before interest and taxes was $878 million for the year. What's really telling is both adjusted EBITDA and adjusted EBIT were above their guidance.
So they beat forecasts on profit, too. Why?
Better margin conversion on those higher revenues, basically. Plus, they kept a lid on some costs, like R&D expenses. That helped offset the extra costs from the supply chain mess.
Right. So making more profit on each dollar of sales, even with those disruptions. That's efficient.
Definitely a positive sign.
Okay, revenue up, profits up.
Yeah.
Now, what about debt? That's often a big focus.
And it's a really big part of Bombardier's story lately. A positive one.
Oh, yeah.
They've been really focused on deleveraging. In 2024, they cut debt by about $400 million just using cash they had.
Impressive.
Yeah, and that includes paying off $300 million of notes, early ones that weren't due till 2027. They finalized that bit in January 25.
Paying down debt early is usually a good sign.
It is. And if you look bigger picture, since the end of 2020, they've slashed their total debt by, get this, $4.9 billion.
Wow, nearly $5 billion.
Almost $5 billion. It's dramatically improved their balance sheet. Their key debt ratio, adjusted net debt to adjusted EBITDA, went from like 41.5 back in 2020.
Which sounds quite high.
Very high, down to just 2.9 by the end of 2024.
Okay, 2.9. That feels much more manageable. So it'd take them roughly 3 years of current earnings to pay off debt.
That's the idea, yeah. Much stronger position.
What does that mean for them practically?
Well, their adjusted net debt is now $3.9 billion. And crucially, no major debt maturities until 2026 gives them breathing room, financial flexibility.
And the markets notice this, presumably.
Oh, definitely. Moody's and S&P Global ratings, the big credit rating agencies, both upgraded Bombardier's rating in 2024.
Like getting a better financial report card.
Exactly. It reflects the stronger performance, the better financial health, makes borrowing cheaper and easier down the road if they need it.
Anything else on the financial flexibility front?
They also boosted their revolving credit facility, basically, their rainy day fund, by $150 million up to $450 million. More cushion.
Okay, so it really sounds like they solidified their financial base. Let's switch gears then. Where's the growth coming from? The report mentioned services and defense.
Yeah, those are the big strategic pushes. Let's start with services. That $2 billion revenue figure we mentioned. They actually hit that target a full year ahead of schedule.
A year early?
A year early, and if you look at the trend, their services revenue has grown at a compound annual rate of nearly 20% between 2020 and 2024.
20% average annual growth. That's really strong.
It's very strong, and they expect it to keep growing, forecasting mid to high single-digit growth annually through 2030.
What's behind that success? What are they doing right in services?
Well, it seems like a few things. They've invested heavily in expanding their global service network, more service centers worldwide.
Infrastructure investment paying off.
Seems like it. And customer satisfaction seems high. They were actually voted #1 in customer support in an industry survey, the AIN Product Support Survey.
That's a nice validation.
Definitely. Plus, they're innovating. They launched new smart services for their defense customers earlier in 2024.
Smart services, what's that involve?
Think customizable maintenance packages, cost per flight hour solutions for government operators, leveraging their existing know-how for a different market.
So moving beyond just selling the plane, capturing that long-term service revenue. Makes sense.
Exactly. Building those long-term relationships.
Okay, and what about the other growth area, Bombardier Defense?
That's positioned as a really key part of their future. They're aiming for $1 billion to $1.5 billion in revenue from defense by 2030.
That's ambitious. Is the market there?
They think so. They see global demand for about 375 specialized aircraft over the next decade. That's potentially a $25 to $40 billion market opportunity.
Wow. And that includes modifications, too.
Right. Not just selling the basic airframe, but customizing them for surveillance, medevac, whatever the mission requires. It's a strategic diversification play.
Moving beyond just business jets into government and military applications. A significant shift.
It is a way to leverage their platforms into a related but different market.
Okay. Now, speaking of their core business jets, the report highlights some milestones there, too, right? And sustainability.
Absolutely. The aircraft portfolio is still central. Big news in 2024 was delivering the 100th Challenger 3500.
The 3500, that's their super mid-sized jet.
That's the one. And it hit that 100 delivery mark faster than any other jet in its category. Shows strong demand.
What's the appeal? What are they highlighting?
Performance, comfort, reliability. It's got that advanced cabin with voice controls, the newage seat. They really push the passenger experience alongside the specs.
And I remember hearing buzz about its green credentials, too.
Yes, very much so. They're positioning it as the most sustainably designed jet in its class.
How so?
It was the first super mid-sized jet to get an environmental product declaration, an EPD.
An EPD, like a nutritional label for environmental impact.
Sort of, yeah. It details the environmental footprint across its whole life cycle, very transparent. It also had a carbon-neutral flight test program.
So sustainability is a key selling point now.
Increasingly, yes. They also offer sustainable cabin materials and have tech to help pilots fly more efficiently.
What about their other workhorse, the Challenger 650?
Still going strong, over 1,000 delivered now. Known for reliability, good range, 4,000 nautical miles wide cabin, decent operating costs.
A popular choice.
And it also got its EPD in April 2024. That was important because it meant Bombardier hit their goal of getting EPDs for all their current production aircraft by 2025.
All of them. They're the only ones who've done that.
As far as the report states, yes. The Challenger 3500, the 650, the Global 5500, 6500, 6500, 7500, all have EPDs. It's a big statement on transparency.
Definitely sets them apart. Are they doing other things on the sustainability front beyond the current planes?
Yes, they're looking ahead. They mentioned the EcoJet research project.
EcoJet?
Yeah, working with the University of Victoria. The goal is pretty ambitious. Develop tech to cut aircraft CO2 emissions by up to 50%.
50%? How?
Through things like advanced aerodynamics, new propulsion systems, low-emission fuels. It's long-term research, but potentially transformative if they can pull it off.
That would certainly be a game changer. Okay, let's zoom out again. What does the report say about the overall market, the business aviation industry, and the economy?
The vibe seems positive for 2024. The industry continued its post-pandemic recovery. Order backlogs were healthy, even with those supply chain headaches and, somewhat slower economic growth globally.
What about the market for used planes?
Pre-owned inventory ticked up slightly but stayed below historical levels, suggests demand is still pretty solid.
And for Bombardier specifically?
Their pre-owned Challengers were stable, inventory below the average for medium jets. Their Globals saw inventory decrease, but still a bit above the average for large jets. So a bit of a mixed picture depending on the model.
Interesting nuances. And looking ahead, what's their forecast for the market?
Cautiously optimistic, I'd say. They expect inflation to ease, global GDP growth around 2.8% for 2025.
Okay.
And the thinking is central banks will likely keep cutting interest rates. That usually helps business aviation, makes financing cheaper, supports demand for new deliveries. The healthy backlog helps too.
So a potentially supportive economic environment. But of course, there are always risks. The report mentions forward-looking statements and uncertainties, right?
Absolutely. Standard but important disclaimer. All these projections are based on current assumptions and things could change.
What kind of risks do they flag?
A whole range. Operational risks, just running the business. Financial risks, debt, capital access, regulatory stuff, the broader economy, market risks specific to aerospace.
Any specifics mentioned?
They point to things like, well, ongoing supply chain issues, geopolitical events. They specifically mention the Ukraine-Russia conflict and sanctions, trade policies, climate change impacts, all the big global uncertainties, really.
Let's dig into the operational risks a bit. What are the main concerns there?
It's pretty broad. Things like, can they execute their strategy, develop and certify new products successfully, manage their order backlog effectively?
The nuts and bolts of the business.
Exactly. Plus, cash flow pressures, relying on key partners and suppliers, product warranties, environmental rules, keeping key people, IT systems security, protecting their intellectual property, managing their reputation. It's a complex business.
It really is. And financial risks, beyond the debt we discussed.
Maintaining enough liquidity, access to capital markets is always key. Those debt covenants, the rules tied to their loans, need careful management. Pension plan risks are another factor, credit risk from customers, maybe changes in government support down the line.
So managing the balance sheet remains crucial.
Always, especially in a cyclical industry like aerospace.
The report also had a 5-year summary, didn't it?
Mm-hmm.
What trends stand out there?
Yeah, looking back 5 years, you really see the progress. Revenue has grown consistently from about $6.1 billion in 2021 up to that $8.7 billion in 2024.
Steady climb.
But maybe more importantly, the adjusted EBITDA margin improvement is dramatic, from just 3% in 2020.
Wow, only 3%.
Yeah, tough times then. Up to that 15.7% in 2024 we talked about.
That's a huge turnaround in profitability.
It really highlights how they've improved efficiency alongside growing sales, shows a positive trend over several years.
Okay. And finally, what about how they plan to use their cash capital allocation and manage things like pensions?
Their strategy seems pretty clear and disciplined. Top priorities for any extra cash are 1, invest in products and services for future growth.
Makes sense.
And 2, keep paying down debt.
Still a focus then.
Still a focus. They also mention they might look at other things, opportunistically adjusting debt levels, pension contributions, maybe share buybacks or dividends eventually, but the core is investment and deleveraging.
And pensions, they have large plans, right?
They do, and they've been actively managing the risk there. A big move has been buying annuities, basically transferring the obligation to pay retirees to insurance companies. They've done about $1 billion worth since 2020.
De-risking the pension plan.
Exactly. Plus other strategies to manage risks from markets, interest rates, inflation, people living longer. It's about prudent management of those long-term promises.
Okay, so a clear plan there too.
Yeah.
Right, let's try and wrap this up. For our listener, after digging through this report, what are the main takeaways?
I think the big picture is a company that's really turned a corner financially. They're beating guidance, generating cash, and paying down that massive debt pile.
Significant momentum.
Definitely. And strategically, they're not just standing still. They're pushing hard into services and defense, which could really reshape the business long term. Plus, that strong focus on sustainability and cleaning up the balance sheet shows discipline.
And the operational wins, like the Challenger 3500 milestone and hitting that services target early, they back that up.
They do. It suggests they're executing reasonably well on their plans, despite the external headwinds.
So for you, the learner, this paints a picture of a company demonstrating, well, real financial strength and a clear forward-looking strategy. That focus on growth and fiscal responsibility, plus sustainability, it gives you a good sense of their direction.
Yeah, and maybe a final thought to leave you with. Considering how much they've improved their finances, that flexibility they now have, and these big growth ambitions in services and defense, what are the next big strategic moves? What will be most critical for them to keep this momentum going and handle all those risks we talked about?
Right. This report gives us a great snapshot of where they are now, but the next few years will really show how they leverage these gains. A lot to watch.